balance. This is how much money you have. Your checking account balance shows how much money you have in your checking account. You'll keep up with this balance on a document called your check register, but we'll talk about that more later. Now, here we have an example of how a check would be filled out. Let's imagine that today is February 23rd, and Susie is buying some supplies for her office from the Super Office Spot. Her total amount is $21.45. She'll put in the date. She'll pay to the order of the Super Office Spot. She'll write the amount there in the box in numbers, and notice that she brings up the cent amounts in a subscript type of writing with a line and X's underneath it. Then she goes to the next line and writes the dollar amount out again in words with the cent amount out over 100, showing it's a fraction of 100 cents. Draws the line to the dollar. Then she signs it to validate the check, and then she makes a little notation down in the notation for herself that says that this was for office supplies. That's just for her use. What is credit exactly? Well, it's really a loan of money. It's a company or an organization that is willing to loan you money to buy things that you can't afford to buy right now. And there are very quick ways to get loans. There are more complicated ways to get loans. And there are loans with lots of different conditions attached to them. Let's look at some of that. Alright, a loan, which is what credit is, means to borrow money which you have to repay. Okay? All these credit card companies and banks don't do this because you're a sweet, wonderful person and everybody loves you. It's because they're going to make money off of this loan. They're going to make money by charging you interest. Okay? Interest is the fee that these institutions charge for carrying the loan for you, for carrying the credit. You're essentially spending their money, so they're going to charge you for doing that. And interest can play a huge role in you paying back this loan. And we're going to talk more about interest in just a moment. Now, interest is based on a percentage rate. Okay, your borrowing percentage rate. And it is money that is added on to the loan. So you have to pay back the loan plus the interest. And usually you have to do it within a certain time frame. Okay, and so you want to make sure that if you do borrow money, don't borrow money unless you really have to or need to. Check the interest rate. Shop around for a good interest rate, because these companies, they want your business, especially if you pay things back on time. They really want your business. But check that percentage rate and make sure that the percentage you're paying is the best that you can get. Okay, our next unexpected expense for the month, it looks like on October 13th, you got a speeding ticket. You owe Precinct 3 $102.78. Ouch. Alright, we've got to write a check for this, but we need to record the transaction first. We have check number 008, the date, October 13th, paid to Precinct 3. We're going to add the notation ticket. We might also put that on our check. In our payment column, subtract column, $102.78. Skip your add column because it's not an add, it's a subtract. You're going to subtract it from your balance of 705.40, and that's going to give you 602.62, $602.62. Now let's go write the check. Please pause the video while you write your check. Now let's write the check for our speeding ticket. Make sure you put your name, check number 008, your date, October 13th, 2011, Pay to the order of Precinct 3. It's for $102.78. Then you'll write your amount out, 102.78, over your 100 fraction. Draw your line. Write your signature to validate, and then in the notation, we might want to put speeding ticket. Now let's move to our expense sheet. Find month number 1. You see where we've already recorded our other expense of $25.63. We need to add our $102.78 from the speeding ticket we just received. Now we're going to add up all of our expenses. The $1,051.05 is all our normal, typical expenses that we expect, all rolled into one amount. We're going to add our unknown amounts, and we're going to come up with a total. So we have our $1,051.05, add in our $25.63, our $102.78, and that gives us a grand total of actual expenses of $1,179.46 for the month. Next on our expense sheet, we need to determine what our monthly savings have been. So we need to take our paycheck of $1,782.08. We need to subtract our total actual expenses. That's everything we just added up, and that's our $1,179.46. That leaves us with a monthly savings of $602.62. Now, since this is month number 1 and we haven't done anything else with our new checking account, that savings amount is also going to be our check register balance. That's all we have left in there. We put money in our paycheck, we have subtracted money out paying our bills and our expenses, and this is what we have left. The savings is going to double this time as our total check register amount. Lastly, let's compare our check register to our expense sheet. Now, on our check register, we have done our monthly expenses here, our monthly income here. We've got our paycheck, we have our expenses that we expect, then we have our unexpected expenses and our purchases. And so we're going to compare that to our month 1 on our expense sheet. We have that written down. But then if you'll see, look down at the bottom and look at your register balance and your actual check register. If you'll notice, they're the same things. Now, when you save your money, that of course stays in your balance in your bank account. And so whenever we figure out what our monthly savings are, we'll add it there on our expense sheet, and then we'll add all our previous balances together, and that will give us our current balance. This is a way for you to kind of check and make sure that your math is correct, and just to make sure that you don't have more money in there than you think you have, and therefore it cuts into your buying power, or less money than you think you have, and you run the risk of being overdrawn.